Welcome everyone to HueFin, also known as HueFin News. Today is July the 11th, 2021. Warren Buffett's $18 billion mistake. Really, was it a mistake? No, of course it wasn't a mistake. We're going to talk about this article real quick from 9 to 5 Mac. It's an article that was posted, July the 8th, so about 3 days. This article has been on the internet, so we're going to go through it because they're trying to tell us that Warren Buffett made an $18 billion mistake. Really? No, from our standpoint, it's not a mistake, and we'll tell you why. And then on top of that, we're going to break through, talk about our last price prediction in Apple. As you guys can see, we did not get this right at all. The trap completely has went against our original price prediction. We're going to update you all on that and tell you whether or not the market in Apple is going to continue to go higher in price, and if so, how high can we expect it? All right, so now join us. The doors are open. Hit the like button, share the video, and also subscribe here to the channel. It's one of our main purposes and reasonings to make sure that everyone in our community learns how to read price charts, right? This is a language, just like sign language, just like Braille. These price bars and volume is actually hinting to us where the market is anticipated to go. So we have to learn this language in order for us to be more sufficient, more proficient in understanding where price is headed, so that we can make the necessary adjustments in price. All right, so first let's look at this article real quick, okay? Because it's trying to insinuate that Warren made a terrible mistake of $18 billion, right? I will have this link to the article in the description of this video, just in case you all want to read a little bit more into it. But again, his mistake cost Berkshire Hathaway $18 billion after the billionaire investor earlier admitted that selling some of the conglomerate's holdings at the end of last year was probably a mistake. Now, you can say that now because it's after the fact. The information that Warren had last year is what made him make his decision to sell some of his Apple shares, right? So it's kind of oxymoronic to think that, oh, it's an $18 billion mistake, when in fact you didn't have the information today about Apple's price making all-time highs back in last year. This is one of the biggest reasons why you don't ever want to go back and look at your prior trades. It's because it makes you think, maybe if I would have held on a little while longer, I could have gotten a little bit more out the market, right? When you make your decision, you need to stand by your decision. Warren did, and he moved on. Now you get these articles try to pinpoint, oh, after the fact, yeah, Warren could have made an additional $18 billion from his stake in Apple, but he sold too early. No, he didn't sell too early. He sold based off the information that he had currently. Now, hindsight, yeah, you could say, oh, I could have kept that position on. Yeah, you could have. But at that present time, back in last year, Warren didn't have the information of what Apple is doing now. This is why you need to make sure once you pull the trigger on your execution of your trades, you don't go back and look at it, because your future trades, you're going to think, okay, should I jump the ship now? Should I take my profits now, or should I wait? Because I remember last time I left too early and I left $18 billion on the table. See, your mind is going to start playing tricks on you to where you're going to stay in a trade longer than what you should. This is one reason why we're bringing this article to your attention, is to say that once you leave a trade, once you leave a position, don't go back and try to say, okay, what could I really have gotten out the market? Because that would have an impact on your mental, on your emotions, on your thinking, to say, okay, when I get into another position, let me hold on. Should I go? Should I wait? Because I remember last year I sold too early. No, you didn't sell too early. You sold based off the current information you had at that time. Okay. So now the investor has more than tripled his money on Apple in the past 3 years. See, which is already a positive note. Warren was already making money. But then it goes into this one word, but. He would have quadrupled it if he didn't sell a chunk of the holding. Now, you can say that now because of what price in Apple has done since then. But this article could not have been written until after the fact, right? Buffett's Berkshire Hathaway conglomerate spent $36 billion between 2016 and mid-2018 to amass the equivalent of 1 billion Apple shares, which would be worth $146 billion today. However, Berkshire Hathaway cashed in about 12% of that stake in recent years. They was taking profit. There's nothing wrong with that. If you like what you have, take the profit and move on. That is precisely what Warren did over the last couple of recent years. Now, they sold 9.8 million shares at the end of 2020, right? Admitting in May that this was his decision against Berkshire's Vice President Charlie Munger. Now tell me, 9.8 million shares they sold at the end of 2020, probably throughout the whole year. Did it have any impact on Apple's price? Right? Did it have any impact? Can you see Warren's footprints from 2020 to where he sold? Of course, everything is relative. Now see, this is what the article tries to bring to our attention. The fund isn't exactly hurting, and we need to know the returns on the investments purchased with the money taken from Apple to know the true cost of the move. Buffett started as an Apple skeptic. See? Even what the world terms as one of the best investors on the planet, Warren Buffett, he was even a skeptic in Apple at one point, stating that technology was a risky field and he didn't understand the business well enough to predict its future potential. Okay. But then he switched. Later, he changed his mind. See, this is one thing that you cannot hold against people who participate into the markets. They are more within their right to change their mind. When Warren was a skeptic about Apple stock, he only took it on the information that he had presently. But more information came out. Maybe someone came and convinced him to say, hey, Apple is different. Apple is more than a technology play, right? Because he later changed his mind, explaining that he now views the company more like a consumer or fashion brand with a huge amount of brand loyalty. By 2018, he completely reversed his position and declared that he'll buy the company outright if he could. Buffett said that his company owns about 5% of Apple stock right now and wants to own more. He'll love to own 100% of it. Okay? So again, it's all relative. When you take out a position and you're in profit, that's congratulatory. You need to give yourself a handshake, a pat on the back, because you got in the market to get profit, and that was the outcome. You got the profit. Don't go back and harp on, oh, I could have had $18 billion more, because trust and believe that even though Warren may have left $18 billion on the table when he cashed out some of his Apple shares, it was definitely formidable. It was definitely a handsome profit, right? So let me go back to the price prediction and let me talk about what happened in our last price prediction to the market in Apple, because we played a weakness and the trap did not even take the price of Apple below our break-even point, which was around $122, right? The market completely went the opposite way. The market maintained the strength, the weakness didn't come through, and the market shot higher. Now, at what point would you have realized, okay, maybe my prediction is not right? Because this whole time that Apple was trading sideways, we would not have gotten out the position of seeing the market go lower. We would have kept the position on. That is why we show you we need to start paying attention at these restriction points. In this particular situation, is around $129. That was where we would have to pay a little bit more attention. So the question is, okay, where did that happen? On what day? Right here. So right here on June the 14th, we would have been, okay, what's going on? The market is not giving us that much weakness. In fact, we close out of our ultimate restriction price and the market closed on the high. Okay, that tells us something. So taking a look at this going forward, Apple price maintained support right up there alongside our restriction area. That also told us a lot. So we wouldn't have gotten out the market right here on June 21st, 2021 under the premise that, yeah, the weakness is not going to come through. We need to switch the prediction and take the long side and take the buy side right here. So instead of it being 5.3%, it would have been around 7.78 right there. Or if you're still into the market now in hopes that the market will come back down in Apple, you'll be down around 18, almost 19%, right? This is why it's very imperative for everyone to watch the markets so that you can minimize those losses. Because it could have been, rather than having 18%, you would only had 7 3/4. This is how you're able to minimize losses, because you can read the chart. All right. So now let me go ahead and take that away and take a look. Apple has broken outside of this trading range. Excellent job, right? We made all-time highs. The market here in Apple is relatively strong. It's like it's never going to come back down, right? But the question is, do you need to come and buy the market in Apple at all-time highs? No. Okay. Yes, the market in Apple is strong, but as you can see in the history of this market, price comes down too, right? So why would you try to jump onto a ship when it's making altitude all into the sky, right? Why would you try to jump on board a plane when it's already left the airport and it's flying into the sky? This is kind of that scenario. Apple's stock is already in the air. It is already flying. You cannot jump on board, especially when it's trading around all-time highs, right? But it's strong. I would definitely give you that the market in Apple is strong. So what we're going to do is let's follow the trend in this space though, right? Because I just want to follow the market in Apple on the trend that we're currently on. Okay, so you can even tell that the market in Apple is currently breaking away from the many weeks it has been touching this ascending line. We are breaking away from that. So on any movement to the downside, I can already tell it's going to be around 140 to 136. That is where we can expect the price in Apple on any bouts of weakness to come down and test. Okay. This is how we're going to track what the market is going to do. This is the 3-day. Are we still seeing strength into the market in Apple? Yes, we are. This is the 5-day. Even the 5-day time frame, the market looks strong in Apple. But just like we did here on this 5-day time frame, okay, just like we did here, the next following 5-day price bar, we came right back down. Can we see that again? It's possible. See, what I'm trying to give you all to understand is that everything is not immediately I need to get on. Sometimes you just need to wait. Sometimes you just need to sit the sideline until the market comes back down to more attractive prices. If you already are not in this position in Apple. If you're trying to get in a position, yeah, wait until the market comes back down to some more realistic prices or cheaper prices, right? So in this particular situation, that is what we're going to do. We're not going to immediately come in and expect this price in Apple to continue to go higher. But yeah, the current environment is strong though. But once the market trades in unfamiliar territory at places of all-time highs, you just need to kick back, wait until the market comes back down to more attractive prices. It's just that simple. So this is how you're able to not allow your emotions to get ahead of you, right? All of this, it seemingly look like the price in Apple just goes higher and goes higher and goes higher, right? And you might get a little fidgety, you might get a little antsy and try to jump on the train. But no, what we have on the chart, yeah, it looks very good if you're already in Apple stock. But if you're not in Apple stock, definitely need to wait until price comes back down. And that's it. So we're not going to play a prediction into the market in Apple. I'm going to hold the trend though. Okay. And this is how we're going to watch the market. We're going to play the market on this trend. So even though we're sitting in the sideline, we're still going to come in every once in a while, see what the price has been up to in relation to this trend. And that's how we're going to play the next move, whether it's to the upside, to the downside. And that's it. All right. So I'm not going to put a prediction into the market right now in Apple. Just going to sit the sideline, let the market continue to operate on a daily basis. And once we see something more noticeable in terms of the market in Apple coming down to more attractive prices, we'll come back in and do a prediction. All right. So now you might want to play the market though. You might want to come in and buy Apple at these prices. If so, tell everyone in our community where you see the price headed in the next 2 to 3 weeks. Do you think the market will sustain this movement higher in the next 2 to 3 weeks, or do you think the price is going to go back down? Let us know. Make sure you maintain a profitability, and as always, trade different.